What is going on, guys? So now that the stock market is coming back, right, we have a lot of great potential here, and I want to give you the recipe, right? This recipe has been working for me for years, and you know why not, right? I'm going to tell you what I do exactly, and I want you guys to get the idea behind it because this can make you a lot of money, right? It's not rocket science, seems simple, but that's the thing that has been working for me for a long time. Let's say that, my favorite stock is Tesla. The reason I like Tesla, like I said, is a growth stock, and not only that, the CEO, he's a visionary. There is a lot of potential there. The reason I do up to 10 stocks is mainly because it's hard to keep track. You see, companies have financial information that they disclose every quarter. They have things going on for them every single day. It's an organization that has a lot of moving pieces. If you try to do like a big index fund, like 100 or 200 stocks, you need analysts on staff to be checking moves happening every single day. The reason I like to stick with up to 10 stocks is because it's easier to keep track. It's easier to track on your portfolio what does better and what does worse. It's much easier to skim some profits when your stocks are doing good. The problem with a small basket of stocks like this is like you're not so diversified. But diversification is not my thing, is Warren Buffett's. I like, going deep and going distilled. This is my strategy. I'm gonna draw some things here. What is going on today in the stock market specifically? Tesla is running because GM said they're gonna start using their charging network, and Mary Barra went on Spaces yesterday with Elon Musk, and that was a funny story. She had to swallow her pride and be like, okay, we're gonna start using Tesla superchargers just like Ford did. It's like everybody stays in line and starts buying Elon Musk's network. It's a beautiful moment for Tesla. It's a great time to be in Tesla, and the people that heard me and bought Tesla the past 6 to 8 months, they're up thousands and thousands of dollars. I will show you the strategy. So how can you be in a position and cash out some money at the same time? If you have no idea how the stock market works, you can buy shares, and then you can buy derivatives of shares, and derivatives of shares are options, right? You can do other things. You can roll options into further in the future options. Options are a little bit more complicated. Options choose direction. I'm gonna keep it short here because I want to make sure that everybody that watches this video can do what I'm gonna show. But if you buy an option, you're saying this stock is gonna go up or is gonna go down at a certain date in the future. Now, the key thing here is that when you say a certain date, you might be right, but not on the right timing. That's how you start losing money in options. When you choose the right direction, but you're not right on time. Because in options, you have to put an expiration date. And let's say if you buy a call means that you're saying that this stock is gonna go up in the future by this date. If you miss that date and the stock hasn't gone up, it has gone sideways or down, you lose money because the time pressure is called a theta decay. Anyway, this is a little bit more complex. I wouldn't suggest if you guys are starting out, you start with options, or the options are the fastest way to make money, are the fastest way to lose as well. So let's start with shares. The problem with shares is you have to have a big chunk of money. What I mean a big chunk of money? If you have 10, 20 or $30,000 and you make 1, 2 or 3%, this is still great money. If you have $100, 1% of $100 is $1, and if you made 1% a day, is not a huge return, right? If you guys want to start investing in stocks, start by a big chunk. Now, I understand that if you have no experience and you're like, oh, I'm about to put $30, $40, $50,000 here and I don't know what's going on, I might lose it all. I get it, okay? But without risk, there is no return, right? So let me show you the whole gist here, okay? Name of the game is growth stocks, and then growth stocks are, I can tell you Microsoft, I can tell you even CRM, which is Salesforce, very good. I like Chipotle a lot, which is not a growth stock, it's not a sexy stock, but they've been killing it on earnings, they've been killing it on locations. Every single thing I can think of, Chipotle does right. A day like this today, right, which is a little bit irrelevant of my whole secret sauce, but a day like this today is screaming call options on Tesla, right? Call options on Tesla means you're betting that Tesla by the end of the day is going to be higher than it is now. But even the pre-market right now on Tesla is 598% higher, right? So there is a lot of strength in the stock today, and you can tell there is money pushing it higher and higher and higher. Now people try to front run this, but this is a dangerous mind. Sometimes people try to front run this and think, oh, I'm going to make this move. The Wall Street people are going to make another move, and now I'm going to make another move, and they start getting confused of what other people are going to do. The thing you have to be focusing on is your strategy. If you focus on your strategy and what you're going to do, forget about what everybody else, then you can start having one piece that's moving, and that's only your strategy. Don't worry about other moving pieces, about other people making moves. Everybody can be right. It doesn't matter what other people do. You gotta have a secret sauce that works for you, right? So I'm gonna open here a note. There you go. I'm gonna put it on the screen, and then I'll show you how this works, right? This is brilliant. Let's say we're gonna start with $30,000, right? And if you guys are saying, Alex, I don't have $30,000, well, at least have 10K and make sure that you deposit this money in the account, because only this way you can get a big return. How you gonna get this 10K? It's a whole different subject. I don't know, go do DoorDash, Grubhub, Uber Eats, I don't know, whatever, but try and get a big nest to start with, right? So let's say we start with 30K. There is something that's called a day trader. If you're a day trader and you're taking profits every day, you get in a position and you close a position in a stock within the same day. The problem here is that you're gonna be flagged as a day trader. If you wanna do this, you're gonna have to have at least $25,000 into the account for day trading, okay? And I know that you might already be saying, Alex, this is stacked against me. Why would I have to put so much money for me to start trading? Is because that's how the rules are set up. I'm sorry, but you gotta have at least 25K to day trade, okay? If you wanna have less than that, you can go on Robinhood, open a cash account, which doesn't have a lot of privileges. They don't do instant deposit, they don't do instant cash out, but a cash account on Robinhood is gonna allow you to do this with less than 25K. But once you reach that 25K mark, you can use margin. You can do a lot of great things. Margin is when you have $10,000, Robinhood is willing to give you another 10, and then you can invest this money, you know? It's like a loan on stocks. Margin is dangerous when the whole economy is going down because they're gonna pressure to sell at the lowest point. What is the strategy that you guys came here for? The strategy is the following. Let's say that my favorite stock is Tesla, and I'm gonna make round numbers and an example. So you can see here Tesla up to here. I remember exactly this moment, all right, was almost 90 bucks, 99 bucks, 100 bucks. Now look what happened from here to here, okay? Why did this happen? The reason this happened is because, like I said, growth stocks have been beaten down so much. Elon was being shaky, people were afraid that he was unfocused, a lot of other things going on in the economy. But then if you guys see this chart right here, I mean, you guys can see, okay, the crazy return upwards. How do we play the game so we don't lose anyway? If you buy shares, if you hold the same number of shares, you will never lose. I will give you an example, an exact example with the Tesla stock. So Tesla at this point right here was trading at 100 bucks, right? And then we are today, right now, this is today's price. Let's say that we are right here and it's trading at 280, 249, right? So today, right, is trading, this is like 3 months ago. And then this is today. Tesla today is trading at 250. Let's make it even and round numbers, right? Let's say again that we started, I'm gonna underline here with 30K. So let's do some simple math here. Let's say that every stock, let's say I put all the money into Tesla, okay? And let's say I bought all the stocks at 100 bucks a share. Okay. Let's see how much that is. If we open the calculator, you got 300 shares of Tesla. So this day, all right, this day right here, you would have bought 300 shares. Look how beautiful that is, right? So we bought 3 months ago where the things were worth 300 shares of Tesla at 100 bucks. Let me change the page now. Tesla is trading today, Tesla is trading at 250 bucks. You could cash out those. And you have 300 shares. All right. If you do the math, you got $75,000, right? Your principal was 30K, right? So profit, you would have $45,000. Now, what is this? Buy low and sell high, right? Well, that's one way to put it. Another way to put it, I chose a very low point on the stock. Nobody would have gotten all the money in because you don't know that this is the lowest point. If you knew, everybody would be a billionaire. But you kind of average in when the stock is beaten down. You are heavy when the stock starts getting beaten down and it's you see these chunks and chunks of sell. You buy and hold the shares. The benefit is that the shares don't expire. The shares will stay there for your kids and the kids and the kids and the kids of your grandkids, right? So you're gonna hold the shares up until the economy starts coming back. Now that this booming is coming back because of the Fed, because of the economy, because, like I said, the future looks better than the past. The stocks are a future looking mechanism, at least 6 months in the future, then the stocks are starting to come back. More money starts flowing in, you know, people and money managers starts actually betting in the stock market again, and they just don't stay in cash, right? So what is this magic recipe I'm talking about, right? Here is the whole secret. I showed you how this is working to make profit, and this is very simple. But let's say that you have 300 shares, right? And like you saw the stock, I said from 100, you saw the stock go to 150. At some point, right? That day that the stock went to 150, you would have invested 30K investment, right? And your 30K investment, if at some point the stock was 150 bucks, and you have 300 shares, right? Would be $45,000, right? $45,000. So you would have a profit of 15K. Here is how we enter this notion of take profits off the table. Your profit is 15K the day that the Tesla stock price is at 150. This is when you cash out just 15K worth of stock. So how much is 15K worth of stock? You would have to share 100 shares. If you sold 100 shares of Tesla when the stock was shares, right, 150, you would have cashed out your profits. You would be still in the position in for 200 shares, and you would have taken out 100 shares worth of profit. This way, when the economy fluctuates, right, when the stock chart is doing things like that, you start cashing out here, you cash out a little bit more here, maybe you add a little bit here, and then you start cashing out here, you start cashing out here. So along the way, you cash out profits. If you apply this technique, you're not gonna wait like everybody else, dollar cost average, and wait 30 years. You're gonna be able to take profit off the table, secure the money. Of course, you're not gonna get the maximum amount, but nobody knows exactly what the stock is gonna do tomorrow, right? So you start applying this technique and take it profits off the table on a good day. And every time there is bad news, start adding a little bit in. I mean, you're gonna be golden. What is the negative on this? This is a day-to-day thing. This is real talk, guys. I mean, there is nothing more that I can give you that's safer and is not gonna get you burned like options, right? What is the negative? The negative of this is you gotta pay attention in the stock market pretty much daily. This is the problem with this technique, that you're gonna have to devote some time or get somebody to devote some time on this, because if you don't, you're gonna miss the opportunity to cash out on a good day. And then another great source of information is Twitter, by the way, right? You can go on Twitter, see what, like people are talking about. Let's say like Mary Barra yesterday, the GM situation, she was gonna use the network, so that today is gonna be a good day to take some profits off the table, So pay attention on the news, pay attention on the stock market. This is something that's time consuming, and that's the main problem when it comes to anything in the stock market. But I mean, if you want to make money and you can make $15,000, right, in let's say 3-4 months, it's a no-brainer that it's worth it, right? But it has to be like your daily, pretty much, second job. And if you don't want to do that, your best option again is maybe an S&P 500, maybe an index fund with less stock. I can tell you a few. FFND is one that's a great one, has the Tesla as the second position. GK is another fund that has Tesla as the first position. PP, Meet Kevin's ETF, has Tesla as the first position and is super overweight, like 25% of Tesla. Well, all these things, if you don't leave money managers manage your money, don't want to deal with it, these are great, but it's exciting. This is fun stuff, This is making 15K in, let's say, like 3-4 months is great. Now, are you gonna make 15K every 3-4 months? Absolutely not. If you have big chunks willing to invest, you're gonna make a lot of money with this system, but you gotta catch the trend that the stock market is going downwards. Because I gave you an example where we bought at the lowest point and then the stock market starts heading upwards. But if you invert this and you start buying at the highest, let's say like back a year and a half ago, then the stock market goes down, then you gotta do what's called hedging. And what's hedging? It's maybe a lesson for another day, but hedging is when you bet the stock market is gonna go down the opposite way of your position. SQQ, SARC are like shorting, is the inverted situation when the stock market is going down and the QQQ actually, which is a tech sector, is going up. QQQ, which is another fund, like I said, goes down, then the SQQ goes up. I know, believe me, I know if it's your first time, sounds complicated, too many ticker symbols, too many things and timing involved, but believe me, buying shares of good companies and then take it profit off the table, the least stressful way to cash out money along the way, Don't let the stock market wipe all your gains out. Don't let the stock market, take you as the waves come. Take some chips off the table and keep reinvesting if things go your way, right? Make sure, take some profits. Now is the time to put money in the stock market. I've told this so many times. The right time was actually 3 months ago, but we're still in pretty good shape. Let's see what they're gonna do on this meeting. I hope you guys rock in your days. This is something I wanted to do for a long time. This is the secret sauce. Let me know if you got some value out of it. Let me know if you have more questions. I cannot wait to see you on the next one.